Welcome to Money Talk JA, the show where we break down how Jamaica's economy really works and how global finance can shape our recovery. Today, we're talking about something that might sound complicated, but it could be Jamaica's secret weapon for bouncing back stronger after Hurricane Melissa, the Catastrophe Bond. Yeah, it does sound fancy, but trust me, by the end of the video, you'll understand exactly how it works, who benefits, and why this could be a financial lifeline for our island Jamaica, land we love. If you want more videos like this, please hit that subscribe button right now. It will really help the channel grow, plus you will receive notification when we release more content like this in the future. Now, first things first, what exactly is a catastrophe bond, or CAT bond for short? Imagine a giant insurance policy, but instead of being paid for by just one company, it's funded by investors from all over the world. Jamaica, or any country prone to natural disasters, can issue one of these bonds through the international financial markets. Global investors buy into it, betting that a major disaster won't happen. But if a big one does, like Hurricane Melissa of course, that money instantly becomes available to the government to help with recovery. Think of it like a crowdsourced insurance for the nation. After Hurricane Melissa ripped through the island, destroying homes, farms, and public infrastructure, the recovery bill could easily reach hundreds of billions of Jamaican dollars. Normally, the government would have to borrow money, raise taxes, or wait months for aid to arrive. But with a catastrophe bond in place, Jamaica could receive instant financial relief within days of the disaster. It's fast cash when the country needs it most, no bureaucracy, no waiting. Here's how it actually works. Let's say Jamaica issues a catastrophe bond worth $200 million. Investors buy into it, expecting to earn a high return, maybe say about 8 to 10% per year, as long as no major hurricane hits. But if a storm like Melissa triggers the payout clause, that principal, the investor's money, gets used to cover Jamaica's disaster recovery costs instead of being returned. So in essence, the investors take on the risk and Jamaica gets financial protection. It's a win-win, unless you're an investor betting against Mother Nature. Jamaica has actually explored this before. In 2021, the country became the first Caribbean nation to issue a sovereign catastrophe bond with support from the World Bank. That bond was worth $185 million and it covered 3 hurricane seasons. So, when Hurricane Melissa struck, it's very likely that similar financial instruments kicked in to give the government quick access to disaster funds. This is why Jamaica has been pushing for smart financial resilient tools, because rebuilding roads, hospitals, and schools take money Jamaica doesn't always have lying around. Now, let's talk about why this matters for everyday Jamaicans. When disaster recovery is delayed, inflation spikes, food shortages worsen, small businesses close, jobs vanish. But with catastrophe bond payouts, the government can inject cash immediately into reconstruction, helping small contractors, construction workers, and suppliers get back to work fast. It's not just financial protection, it's an economic jumpstart. Here's another interesting benefit. It stabilizes Jamaica's credit rating. After a major hurricane, credit agencies like Moody's or Fitch they usually downgrade a country's rating because they expect borrowing to increase. But with a cat bond, investors and agencies, they can see that Jamaica has a safety net, meaning less fiscal risk and more investor confidence. That helps keep the Jamaican dollar stable and borrowing costs lower. However, it's not all sunshine and blue skies. These bonds are expensive to set up. Jamaica has to pay annual premiums, sometimes millions of US dollars, to maintain the coverage. And if no disaster occurs, that money is gone. But think of it like car insurance. You don't complain if you don't crash your car. The real value is peace of mind and financial preparedness. Then there's also the risk of trigger disputes. If a hurricane doesn't meet certain wind speed or pressure criteria, Jamaica might not get paid, even if the damage on the ground is very severe. That's why the government must negotiate strong terms and accurate meteorological data. The payout system is all about precision. Still, the potential upside outweighs the cost. With climate change making storms like Hurricane Melissa stronger and more frequent, these financial tools could be Jamaica's best defense against economic collapse. Just think, if the government gets $150 million US within 2 weeks of a storm, that's enough to rebuild thousands of homes, repair key infrastructure, and get farmers replanting. That's real resilience, not just recovery. Other Caribbean countries are watching Jamaica closely. Barbados, the Bahamas, and Grenada have all been studying our approach to catastrophe bonds. In fact, some experts believe that if the CARICOM create a regional catastrophe bond, pooling risk across multiple islands, the entire Caribbean could easily secure better coverage at lower cost. Jamaica could lead that initiative, becoming the region's blueprint for climate finance. So, let's put this in perspective. Traditional disaster recovery relies on borrowing, donations, and international aid. That is slow, uncertain, and politically messy. Catastrophe Bond flip the script. They bring Wall Street money into the Caribbean's fight against climate disasters. It's a fusion of finance and survival. Looking ahead, the real opportunity lies in combining catastrophe bonds with other tools like parametric insurance, climate resilience funds, and private sector rebuilding partnerships. Imagine if large companies like JPS or NCB also participated in similar risk transfer mechanisms. That could protect the entire economic ecosystems, from households to major corporations. At the end of the day, the catastrophe bonds represent more than just financial engineering. It's a symbol of Jamaica's determination to take control of its future, to plan ahead, to stand strong, and to rebuild smarter. Hurricane Melissa may have tested us, but with tools like these, Jamaica can bounce back faster, stronger, and more independent than ever before. This is Money Talk JA, where we turn complex financial stories into powerful lessons for Jamaica's future. Don't forget to like, subscribe, and click the video on screen now to see our deep dive into how money talks in Jamaica, land we love. Catch you in the next video.